The battle against financial crime has never been so important or so difficult. In our digital economy, criminals are becoming more sophisticated. They operate on a global level, moving increasing amounts of money and using banks to commit financial crimes or to launder the proceeds. Money laundering is where money of criminal origin is fed into the financial system, disguised by being moved around or converted into other assets, and introduced back into the financial system where they appear to be clean. The central role of banks in financial flows makes them key drivers in the fight against money laundering and organized crime. This is why they are subject to intensifying levels of supervision and regulation. But banks are in a difficult position, as there is an expectation gap between what the public, prosecutors and regulatory authorities expect of them in order to prevent financial crimes, and what banks can actually do to detect them. In fact, financial institutions are being overwhelmed by the fight against financial crime. Improvements at banks have had little impact on identifying and preventing crime. Only 12% are identified through transaction monitoring alerts, for example. Instead, external sources such as clients, media or authorities are too often the trigger for detecting financial crime. At the same time, there has been a significant increase in the number of MROS notifications, up 61% in 2017. And mandatory suspicious activity reports rose by 96%. Banks must ensure quality rather than quantity if they are to avoid swamping regulatory authorities with notifications and preventing them from focusing on the fight against financial crime. For banks to improve, they need true specialists, the right tools, and the implementation of a robust compliance culture.
The relationship between the financial industry and regulatory authorities is not a simple one. Banks are considered to be a key instrument in combating financial crime, and rightly so. Meanwhile, they face criminals who are increasingly innovative and agile. Current approaches to transaction monitoring and know your client are no longer sufficient for today's challenges. Major changes are needed to risk management and the control framework if banks are to be effective combatants against financial crime in our rapidly changing environment.
For more insights, visit kpmg.ch/financialcrime.